My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. I'll be my friends. I'm just trying to make you a little money. My job is not just to entertain, but to educate and teach you. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. The stock market isn't always a friendly place. It can be volatile, it can be painful, and just downright difficult. There are tons of big picture problems that can derail any rally. Problems you might not have any idea about until they hit us smack in the face. That's why I'm so adamant about trying to make you a better investor. I want to teach the tricks of the trade so that when the market gets negative, which it always does, when it becomes hostile, you'll be prepared and you'll know what to do. The same tricks I teach you about constantly when you join the CNBC Investing Club. Now, I've spent my entire career analyzing the way stocks trade, searching for patterns of what's worked for me and what hasn't. And from those observations, I put together a set of rules that are designed to help protect you from the worst mistakes you can make in both good markets and bad. Rules that now make up the Investing Club's, really, the guidebook. And I'm sharing that with you. As much as I sometimes might seem like an unhinged lunatic, maybe not as much before, the truth is that I'm all about discipline. You're going to make mistakes in this business. It's inevitable. But if you stick to your discipline, if you stick to the rules, that should help you minimize your losses and maximize your gains. So let's talk about discipline. I'm always telling you to buy best-of-breed companies, even if you have to pay up for their stocks. I use that phrase constantly. Why should you try to identify the stocks of the best-run companies with the best prospects in each industry? Let me flip that on its head. Why is owning best-of-breed even a question? When you're shopping for a car, you buy best-of-breed, or the best you can afford. We pay up for the highest quality brand because we know that a brand, and a good brand, signifies reliability. It tells us that we can expect a higher level of service, a quality of ownership that will make your drive safer and easier for years to come. Nobody would ever set out to buy a worse-breed car, would they? I mean, there are simpler ways to put your life in danger. So why is it that so many people seem to feel differently about the stock market? For instance, why are we drawn to the penny stocks that are constantly being talked about on Twitter? It's the same reason why so many people throw their money away buying garbage cryptocurrencies. There are a couple of good ones. Why not stick with those? Many of us simply can't resist what we perceive as a bargain. Emphasis on the word perceive. Here's the thing. If you go hunting for cheap stocks of low-quality companies, it's more likely to lead to losses than to gains. Now, let me be clear. I love bargain hunting. But I only want genuine bargains where the underlying merchandise is actually worth something. You know what's not a real bargain? Buying junk merchandise just because it seems to have a low dollar price. That's why whenever I get asked about a low-quality stock in the lightning round, you'll hear me say something like, hey, Ski Daddy, if you like blah, 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 then you'll love Procter & Gamble because that's best of breed. Sure, P&G's probably not going to give you any short-term pyrotechnics. No. But it's the kind of long-term story that you can count on. It's an industry leader with a great balance sheet, a long history of dividend boosts, and it's got some of the best brands on earth. What makes a company best of breed? Well, like the late, great Supreme Court Justice Potter Stewart, what he once said about pornography, I know when I see it. But to put it into words, when I say best of breed, I'm talking about well-managed, high-quality companies with great balance sheets like a Procter & Gamble. If you can get Procter & Gamble on sale, that's fantastic. If you can't get it on sale, though, I'd still prefer you to pay up for something similarly great rather than just try to pick up some penny stocks just because they seem cheaper, but they're not. Remember, at the end of the day, there are very few genuine bargains out there when it comes to second or third tier players. Their stocks may look cheaper than the top dogs, but that's because they deserve to be cheaper. The businesses are worth less. Don't worry about paying a higher price to earnings multiple for a best-of-breed business. It may seem more expensive, but in addition to usually being the better investment, you're also buying peace of mind. A great company like NVIDIA, for instance, almost always looks super expensive, doesn't it? But the stock just keeps charging steadily higher, as it has for more than a decade, with only an occasional detour, because NVIDIA is best of breed, too. Now, once you find yourself in a best of breed company, the kind of company with a story you believe in, I got another important rule for you. High-quality companies represent value, and giving up on value is a sin just because the stock doesn't act so well for the moment. I see so many people throwing in the towel on companies that have real assets and real worth just because their stocks aren't working right now. It's driving me nuts. Look, patience is a virtue in this business. If you have a reason to believe in a business, don't dump its stock just because it's not getting any traction for the moment. Sell. You're not a hedge fund manager, for heaven's sake. You don't need your positions to show a gain every quarter or every month or even every day. You don't have any investors who are going to pull their money out from you because one particular position is taking too long to pay off. So just indulge yourself. You can afford to wait for these stories to play out. I say this because you will be tempted to sell even best-of-breed stocks if they don't do something in a short period of time. You may correctly identify value, but this market can make it very difficult to stick to your guns, even with something you truly believe in. When you own a stock that's going down, you're going to feel compelled to give up on it. But in many cases, if you've done your homework and you have conviction in the underlying business, that urge to sell will be a mistake. And look, it happens to the best of us. For instance, in 2016, I did an interview with Tim Cook, the CEO of Apple, after his stock had plummeted from split-adjusted $31 to $23 in a fairly short period of time. Everybody was giving up on Apple. I looked at the stock, which was selling an incredibly low price earnings multiple. I looked at the customer loyalty, the service revenue stream, and yes, the cash position, balance sheet. And I said, what the heck is the point of selling the stock of a company that makes the greatest products in history? That may sound like a no-brainer, but there are a ton of Apple skeptics at all time. And they're always constantly arguing. They're always out there saying, oh, the company's best days are behind it, presenting these surveys of Apple's component suppliers as evidence that their business is in decline. Time after time, they've been proven wrong, yet they don't give up. They don't go away. Sure enough, telling you to buy Apple at 23 turned out to be a fabulous call because the insane amount of negativity gave you a wonderful opportunity to pick up the stock at a major discount. The key here is that Apple is a high-quality company, a best-of-breed company. So when the stock goes down, you know that it's getting cheaper. Selling Apple at 23, as so many of the so-called great minds told you to do, at 23 would have been a classic example of giving up on value. And you would have missed one of the biggest moves of our lives. Oh, and of course, there's no apologies from those who downgraded then, at least that I know of. And look, in late 2022, many were tempted to make that same mistake with NVIDIA, as all things tech had gone through a miserable year. But I learned my lesson from Apple, so we stuck with NVIDIA, and the stock eventually tripled in a little more than 7 months. Here's the bottom line. Don't be afraid to pay up for best-of-breed stocks. They may have higher price earnings multiples than the stocks of lower-quality companies, but they're also much less likely to blow up in your face. The best-of-breed premium is worth it. Oh, and once you find a company that's best-of-breed with a story you believe in, don't let the bear scare you away, even if the stock is temporarily broken, because patience is a virtue, and giving up on a value stock is a sin. Let's go to Mandy in Maryland. Mandy!
Professor Cramer, how are you?
I am fine, Mandy. How are you doing?
I'm hanging in there. Thank you so much for taking my call. Love your show.
Oh,
I watch it. I breathe it every day.
Thank you.
I really appreciate all you do. My question is, if you have $5,000, how do you invest?
Okay, I have said, and I will reiterate, that for your first $10,000 and not before then, you should put that money in an S&P index fund, preferably a low-cost one. Only after that, because I care about diversification more than anything else, only after that can you start buying individual stocks. How about Jerry in Missouri? Jerry!
Hey, Jim. Thanks for taking my call.
Of course, Jerry. How can I help?
You stress diversification all the time.
All the time.
But my investment strategy is mainly growth. Things like gold, recession-proof stocks, and dividend stocks have all backfired for me. I prefer mega-cap tech stocks, and I've been enjoying the ride in my tech-heavy portfolio lately. I currently have about 20% in cash, and I'm waiting for a downturn so I can buy some more. I feel like I can have a fairly diversified portfolio, even though it is technology-dominated. What are your thoughts?
Okay, look, I think that we have to understand that there have been times in our careers where that strategy has been very bad. So that's why you can have a couple tech stocks. But I think to be at tech heavy, if we get something like a 2000, or we've had a couple others, even 2008, or in 2021, where we then began to roll over, I am worried about your position. So let's be a little more careful, a little less concentrated. Please don't be afraid to pay up for best of breed stocks. And once you find them, don't let the bear scare you away. Patience is a virtue. Giving up on value is a sin. Always remember that. Made money tonight. If you're trying to get a handle of any tape, I like to look at one corner of the market to help me get a sense of where we're headed. I'll reveal what it is and how you can learn from it too. Then pullbacks are inevitable, but how do you prepare for one? I'll give you my strategy for handling whatever the market throws at your portfolio, and I'll reveal a rule for investing that may seem obvious, but is an easy step that can help you design a more high-quality portfolio. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.